afternoon, guys, and welcome to 3L's inaugural webinar, April 2nd, 2024. My name is Merk, Souvenir, and I'm the founder and CEO of 3L Capital. 3L Capital was founded in September 2022 and is an innovative, progressive boutique investment bank that looks to bring unique opportunities to the marketplace. Hope you guys enjoy the show.
3L Capital is a boutique investment bank founded in Toronto, Canada in September of 2022. Mining tends to be what Canada leads with.
Copper, lithium, graphite, all these energy critical minerals. And we need lithium for batteries. For all these charging networks, we're going to need more copper.
We're always on the lookout. We're always meeting people. They can come to 3L. We'll listen to their story.
Good afternoon, everyone. We're joined here by Peter Maletis, portfolio manager of Merk Investments, responsible for the ASA Gold and Precious Metals Fund. How are you, Peter?
Doing great today.
Well, thank you very much for participating in 3L's inaugural webinar. Really appreciate that. Peter, before we jump into today's topic in fireside chat, something that's very sensitive amongst portfolio managers is obviously performance. We've got the overall commodity price trending in the right directions, but the equities aren't performing in correlation with the performance of the overall gold price. Why don't you touch on how your performance has been year to date and maybe how performance has been trending over the last 6 months?
2023 was a relatively challenging year despite a supportive gold price. The gold price was relatively flat over that time frame, but the equities significantly underperformed on a relative basis. A lot of that was driven by the central bank buying of gold, physical gold, which offset the ETF outflows, which was record levels. I think we also saw by the end of the year, companies were actually having some of their worst guidance and financial years that we've seen to close out the year. Fourth quarter numbers across the board, regardless of the segment, were pretty weak. Not only the large cap producers, but the royalty companies, the mid cap producers, and the exploration and development companies all had challenges. No segment was immune to kind of the year-end doldrums. And so then the guidance came for early in 2024, which also kind of shocked a lot of people. We continue to see some inflation that was causing margin compression. And thus, the gold price continued to do well, but the equities underperformed. I think we're sort of seeing a rebound in that as the gold price has rallied. But I think that's something we're anticipating that should drive equity performance going forward.
You've got the macro going the right way. Even if equities start to perform properly, you've got to have the right portfolio mix, if you will. What percentage of your portfolio is in North America, Latin America versus rest of the world?
So in Latin America, I'd say roughly 30 to 35% is we're invested there. And then I include Mexico in that. In terms of North America, we're roughly 20%. And then I'd say the rest of the world is between Asia, Africa, and Australia, roughly 50%.
Our next question, Peter, is always one that I'm always a little hesitant to ask because, if we all had a crystal ball, we probably wouldn't be, working or doing this job. But over the last 12 months, gold is trending in the right direction, above US $2,000 an ounce now. The ratio in silver seems to be improving, and copper is now above $4. Where do you see these prices going in 2024? And what do you think will drive these changes?
We entered 2023 kind of under the impression that the Fed would eventually start cutting rates, or at least intimating that they would be. We didn't see that, but the gold price held in pretty well. I think the primary driver of that was the central bank buying. The Chinese in particular were buying a lot of physical gold, while we saw significant outflows in the ETFs. We look at that constantly, and we believe that as there is a shift in sentiment towards the gold price from the generalist investor, we'll see inflows of the ETFs. I think that could be a good driver for the gold equities in terms of inflating the gold price. We also have the Fed, which is still holding on to the higher for longer sort of framework for interest rates. We believe that they will have to start cutting rates at some point over the next 6 to 12 months. And that will be the primary driver of gold increase, which will also drive equities higher. And then finally, the dollar will continue to, we believe, is weak, will continue to weaken as we move forward with, the Chinese and other central banks globally looking to essentially de-dollarize their economy and shift into other currencies. So gold is that driver, initial driver for those economies.
Thank you for that. You touched on something which both yourself and myself, being in the commodity equity business, was, here's what's going to drive the macro commodity price, but the equities, as you know, haven't participated in the move. What do you think the reason for the real disconnect has been recently between the commodity price versus the performance of the commodity equities?
ETFs flows is primarily a North American driven investment sort of thesis. And I'd say the general investor in North America and Western world really has avoided the gold trade. They don't believe, they're short term in the way they're looking at it, and they are not investing in gold, nor are they investing in the equities. So what you have is the Chinese, who are longer term and have other motivations for buying gold, are supporting the gold price, but really don't have an interest in the gold equities. And so once we see that change of the generalist investor, or even some of the precious metals funds, that will drive the gold equities. We also will see, hopefully, the gold price. I think we do need to see the gold price increase even further for the generalist investor to get involved.
Yeah, I completely agree. And also hopefully that leads to a increase the flow of funds, which we know we all want to see. I've known you for 15 years plus. I kind of know the answer to my next question, but for those in the webinar that are listening, what criteria do you look for in a company that determines a good investment candidate for you? I've heard different answers. Some people go with the asset first, management second, because you can always change the management team. Others go with management first, asset second, because a quality management team can usually take a mediocre asset and make it better. At ASA, what do you look for in a company to determine if it's a good investment candidate for you?
Those two are the top two. We have it's between assets and management, but I'd say management is probably the most important, because they're the ones that actually can take somewhat marginal assets and make them better that have been in the wrong hands prior to that. But asset quality is always very important, and if you can find a good asset, you kind of latch onto that, and then you stick with it while management teams kind of ebb and flow and change the asset for the better. So those are the top two. Jurisdiction is always important. It's part of the rubric of what we look at. So there are certain places we won't invest, but for the most part, I'm willing to take some geopolitical risk for asset quality.
And how long do you usually hold your positions for? Like, I don't know, I'm sure you don't have a minimum or a maximum time, but in general, for the audience, how long do you tend to hold your positions?
Yeah, I mean, it depends on the stage and when we're investing, and so, but the earlier stage stuff, there's been names that you and I have been involved in for 5 years now. I mean, I've been managing ASA for a little over, or almost exactly 5 years, and I'd say that there were some investments we made in late 2019 that we're still in. So it just depends on the quality and how we feel things are going, but we do take a long-term approach. It's not a one-year time frame. It's 3 to 5 probably.
I mentioned copper at above $4, and that seems to be the red metal starting to become, very topical, and what everybody's kind of starting to look towards. What other commodities outside of the precious metals are you personally bullish on? We've obviously got the EV trade also happening in the background too. What other commodities do you like outside of precious metals?
I think medium to long term, I think almost all the commodities are investable, and I think I have a positive view on all of them. I don't spend a ton of time looking at them because, it's not our mandate. But if a good asset or a good management team comes along, we'll definitely look at it. So, I mean, I actually think lithium here, medium to long term actually looks really good. If you can find the good assets and the good management team early, you'll end up having a winner. Copper's going to be there all along. Again, I don't have a preference for any specific commodity. I'd say it's more asset quality management if I look outside the precious metal space.
It's going to be interesting to see in 2024. There hasn't been a lot of pure play like battery metals or critical metal funds yet. So it'll be interesting to see how the landscape changes in the next 12 months when it comes to
yeah, no, and I agree. And when I'm looking, even when I'm looking at precious metal side, the earlier you invest, you take the commodity risk somewhat out of the story. So, you have non-commodity specific catalysts for the early stage names that help drive equity performance. And so that's where a lot of people, when you can invest in the sizes of companies that we do, you have that sort of edge. And so I'd say some of the non-precious investments we've made have been management and asset specific, and they're early stage where we see a management team particularly that can drive these stories forward with catalysts. I guess one of the things we also kind of look at is we like to get a little bit early before the larger institutions. So we've kind of phrased it as institutionalizing a name and getting it up to speed where, there's some founders, some guys behind this story that are really good, that we like, that we know they'll help push it forward. We get in there before the larger fund management complexes do. And we kind of rationalize it and get it to a point where they feel comfortable investing in it. And that is the next catalyst where the larger capital that even ASA is not capable of funding, you need these large names to be able to take it to the next step. But I think, our network between yourself and ASA, my partner, Jamie, and I, we talk to everyone and get them involved. And that's how we get them to take these companies to the next level.
Let's spend a minute on that. There's been a couple of years where you've single-handedly held up a lot of small cap companies when it comes to financing them. Capital's been really hard to secure for the junior explorers and miners, as you know. There's only enough money to go around, and everybody's kind of looking for capital to move their projects forward. How do you see this evolving in 2024? Let's assume the macro continues, we get some flow of funds. How will the funds be deployed into the companies? Do you think the portfolio manager will take a safer approach, kind of start with our seniors that are more liquid and work their way down to the smaller caps? And then, or what kind of financing strategies? We've seen a lot of converts now, stuff that we never used to see in the past. What do you think is going to happen when it comes to the flow of funds when portfolio managers go to deploy in 2024? Should it be a good year? And what kind of financing strategies do you think we see in 2024?
We invested in a lot of small cap names, and we took sort of, I won't say a shotgun approach, but we like to call it a venture capital approach, where we don't expect all the companies to be successful. 4 or 5 years ago, we had a lot more capital deployed as we transitioned the portfolio from a large cap portfolio to a smaller cap portfolio. The discussions are a lot harder right now because the amount of money that we can put to work is not as great. And so it's a little more challenging. So I agree with you. I think that the royalty and streaming companies are being, more aggressive. I think, as a portfolio manager in equities, I'd prefer not to have those types of royalties or streams on our assets because it takes away some of the leverage. But in this environment, you need to take all the money you can get. They've also been a lot more creative where they're adding equity as well. And so at certain stages, it's the right call. We've definitely been looking at some convertibles as well. The thing that's going to propel everything is when we get the generalist investor flows into the large cap open-end funds and flows just from the generalist investor into the precious metal space, where we'll see deals that are being done that will help fund the next stages of growth for these companies.
My next few questions are more around jurisdictional risk. I touched on Mother Nature sometimes put these minerals in, we can't control where they are, and then some of these minerals are located in some very challenging jurisdictions. When it comes to jurisdictional risks and evaluating new investment ideas, I'd love for you to touch on how you and your partner Jamie deal with that internally. We've obviously got, wars going on and some internal wars in countries that maybe some Western world people aren't even aware of. How do you evaluate jurisdictional risk when it comes to new investment ideas?
Geopolitical risk is always very challenging, and governments change a lot. And so there will be ebbs and flows of how certain countries react to permitting and nationalization of different assets. If you'd asked me 2 years ago, West Africa was looking great. Right now, it's really challenging. Certain countries are all right, but some of the countries that we've been comfortable with in the past are really challenging. Latin America has been challenging as well. Mexico and Chile, have struggled a bit with getting permitting. It's one of those things where you just got to do it on a case-by-case basis. You also have to, the core is the management team and their relationships within the countries. If you have the right people, things can get done as long as they're doing it the right way. And that's part of the due diligence we do. But getting a mine permitted and built in North America and Canada and US actually can take a lot longer. So it's not as simple as looking at certain countries and saying yes or no. You need to understand the region they're in. You got to understand the relationships they have, and hope and believe that is the right group that you have involved. I think between Jamie and I, we've done a lot of site visits globally over the last 15 years, and so that's also part of the rubric that we use. Is we know a lot of people and we've been to a lot of places, and so we can make some fairly quick decisions around what we will and will not invest in what jurisdiction.
Yeah, so it's funny. I was just talking to somebody recently, and we were talking about South America, and it seems like every year the challenges jump from country to country. One year it's Chile, next year it's Peru, then Argentina, etc. This is a LATAM webinar. So what countries are the most attractive to you, and why? I guess you touched on permitting, ease of permit. There's obviously quality of asset, but what countries are the most attractive to you in the LATAM region?
Some of our larger investments are in Brazil and Guyana right now. Those are jurisdictions where we feel fairly comfortable. Mexico, we have an election coming up this year. I think a lot of the permitting risk will be more understandable once that happens. There are a lot of companies that are waiting for permits there. I have trouble believing that Mexico is not going to allow open pit mines in the future. So it's just a wait and see. A lot of the companies have become somewhat binary in the outcome of how things are going to act based on whether or not they get a permit. So I'd say, it's Brazil and Guyana right now. We have, Mexico. We don't have a number of investments there, and I actually think the valuations right now are very cheap. So I think the opportunity is really good there. Outside of that, we have some investments in Bolivia. We have some investments in Peru, Ecuador. They're all okay. It's just a question of how some of the elections go and how the management teams kind of manage the process.
It's funny, I think you said earlier, you take the venture capital and private equity. I think venture capital approach seems like the same with spreading the dollars in different countries. Same thing. They're not all going to work, but when they do work, they hopefully work extremely well. And this question is always a difficult one to ask. Are there any regions that you won't invest in? I like to you tend to use the word challenging, which is a perfect word to be non-offensive, but how do you generalize where you probably won't go currently today? Maybe you'll go there. Never say never, but what regions won't you invest in right now?
Some parts of Asia are off the radar for us, and some parts of Africa are definitely no-go. Again, it just depends on the groups in charge, basically, who runs the country, and obviously the influence of outside backers can also cause some problems. So I'd say West Africa is getting a lot more challenging. We own stuff there, but I'd say that there's a lot of intrigue with the French backing out there. In Latin America, I mean, again, I'd say for the most part, they are investable, but it's, more of a function of where are the politics at that moment. We have the ebbs and flows, and so they'll, you see it, every new term happens, and somebody with the country will go the other direction of who they'll allow to invest in the permitting. So again, you just have to play it by monitoring the elections, and is evaluation good to take that risk now? Sometimes it is, if the asset's that good.
That's what keeps our job so interesting, right? Like if it was really easy, everybody would be doing it. But mining has its challenges. When it works well, and it's quite rewarding.
Well, part of the problem also is there's so few of us now, and it seems like it's dwindling the amount of us. And so, feeling like I'm one of the older people doing this now is a lot more challenging to think mentally.
We don't know anything else that we can do. Nothing else we know how to do.
Exactly.
Well, I think, we've got the Fed in the background this year. We've got an election that we won't get into politics here. We've got a lot of good things, I think, potentially happening where we could have a good 2024-25. So let's keep our fingers crossed, and hopefully, you and I are sitting down 12 months from now, reviewing this tape, and some good things have happened in our industry, in our sector. With that said, Peter, any final insights you'd like to share with investors before we sign off?
You brought up elections and there is a big election here up down in the U.S. and I'd say as an American, I can say that it's going to be very interesting to see what happens there, because whoever wins it seems like we'll go in very different directions, and that'll create some opportunities and some positive, negatives globally for our type of investment. So we'll see how that goes, but it's something that we need to pay close attention to because it's a big driver of global economies.
Never a dull moment in our industry. Ladies and gentlemen, that concludes our questions with Peter Maletis from Merk Investments, the portfolio manager for ASA Precious Metals Fund. Peter, thank you for your time, and hopefully we have a great 2024.
Thanks, Mark. It's always good talking to you. Looking forward to the future, and I anticipate that 2024 will be a good one for everybody.
Thank you.
What's very interesting in mining, you have a lot of people that come from usually small towns that have great ideas, and now 3L has the ability to marry the two, the idea plus the capital needed to execute that idea.
Then we also look at the data. So do they have the right assets? Are they taking the right steps? And sometimes the only missing piece of the puzzle is nobody knows who they are.
And that's actually what really drives me at the firm. Let's go out there, scour the world, and let's go find the next big one.
I'm here with Charles Funk, CEO of Heliostar Metals. Heliostar trades on the TSX Venture under the symbol HSTR and on the OTCQX under the symbol HSTXF. Their current market cap is $42 million Canadian. Charles, can you give us a 30-second high-level overview of Heliostar Metals?
Thank you very much for having us. Heliostar is an ambitious company that's looking to build the next major gold mine in Mexico. We bought up a very advanced project early last year. We have a view that it makes much more sense as a very high-grade, very profitable underground gold mine, and we're currently growing the resource, stepping through the studies to make a construction decision at the end of next year. What's unique about Heliostar is we want to build a mid-tier gold producer, and Anapol is our first step along that pathway.
Great. Thank you to everybody tuning in to today's webinar, and let's jump in. So you acquired Ana Paula from Argonaut Gold in February 2023 for what will eventually cost $30 million US. What did you and the team see that others didn't?
So first of all, we saw a market that you could buy advanced resources a lot more cheaply than you could discover them. So we took the strategic view that that was a better outcome for our shareholders in what was a pretty tough gold equity market. And projects specifically, we had a couple of rules really were important to us. One is we weren't prepared to accept resource risk. There's lots of low quality resources out there, and in our opinion, they'll always struggle. And secondarily, we had to see an opportunity and angle that we could get an undervalued project with a lot of upside. And so Anapol has had $100 million invested in it prior to our acquisition. It's permitted for open pit mining in Mexico, which is extremely valuable today. It's had a PFS completed on the open pit scenario. But you can almost think of it as this sort of giant sea of low grade with these high grade zones in the middle. And the high grade panel at the core is spectacular and where all the economics really sat. We recognize that instead of sort of focusing and struggling away and with some technical risk on the low grade, let's go underground and let's mine the high grade. And we've had a bit of good fortune over the last 12 months. It's only been 12 months, but that high grade's grown significantly and proven to have a lot better metallurgy than was previously thought. So we identified that, but we've been even more pleasantly surprised on how good that core of the deposit is.
Can you give us some examples of a potential intercept through the high grade panel and kind of rough dimensions of what we're talking about here?
We put a resource update out in November last year. It's just over 700,000 ounces in the M&I category, another 450 in inferred. Averages 6.6 grams at the M&I and 4.3 at the inferred. So a very high-grade deposit. The dimensions of the high-grade panel are approximately 280 meters long by 100 meters tall by 60 meters wide. It's an incredibly wide, consistent ore body. So we regularly drill 100-meter drill holes at 5 to 15 grams per ton. That's one of the most unique things about this ore body is the consistently very wide, very high-grade results. And ultimately, that means profitability. So not many companies in the world can consistently drill these kind of results.
When I was at site last year, that was something that really stood out to me at the core shack. You guys had all the core laid out, and you had each box colored by assay, and it was just sample after sample of continuous mineralization. It was, it's pretty impressive compared to some of these other deposits out there.
Yeah, it's not a vein deposit. So it's not a vein where you hit high grade and if you miss, it's all dilution. If we miss the 15-gram dirt, we get 12. If we miss 12, we get 10. That means bulk underground mining is the likely option, and that significantly lowers our costs. So it goes to margin, but it is unique. I haven't seen many projects like this in my career either.
Anyone following Heliostar is undoubtedly impressed with what you guys did last year. Can you walk us through what you achieved in 2023 and what the implications of that work are?
Yeah, thank you. I'm very proud of what we delivered last year. The market maybe just wipes its face. We're a similar market cap to what we were, but technically we achieved a lot with the project. We had a number of goals that we actually laid out in a press release with timelines of when we would deliver them, and that pride in the team comes from our and their ability to deliver that on the timeline that we laid out. There was three key takeaways really that we thought we could change. The first was growing the resource. So we added 300,000 very high grade ounces in that resource update. And we did that at around $16 an ounce. So it was a very efficient use of capital, which it has to be in those tougher markets. Then the next one was we believe that high grade could come forward in the mine plan. And so there's 200,000 ounces at better than 10 grams per ton. That's very likely to be the start of the mine life. We're doing the PA at the moment, so to be very clear, we do not have numbers on that. But hypothetically, if that's $100 a ton rock worth $500 a ton, it's hundreds of millions of dollars of free cash flow if you could get into a zone like that early, which is clearly our intention. And then the third part was the metallurgy. The Halo doesn't have the best metallurgy. It's one of the reasons we didn't like that scenario. The door was open, though, for the high-grade panel to have significantly better metallurgy. It's a bit later as a gold event. It's a different style, slightly different style of gold mineralization. And we exceeded even our own internal expectations. We demonstrated an 80% recovery with a conventional 75 micron grind flotation CIL of that material. And in reality, that was probably the biggest de-risking result that we delivered last year. It got overshadowed by the results and the resources happens. But those three were the big step changes. And now we're working on a PEA this year to show what that'll ultimately mean from an economics perspective. But pretty significant transformation of Ana Paula in 2023.
Most of the historical metallurgical work was on the Halo, from my understanding, and not that high grade panel. And so for you guys to show that you could potentially get 80% recovery, using a conventional CIL flow sheet, to me, that's a significant game changer. So what are the next steps for metallurgical testing to further de-risk Ana Paula on the processing front?
We've got a couple of steps underway. In the PEA, we'll be doing an update and showing that metallurgy at a greater scale. We'll probably capture the high-grade core and the distal material in a couple of composites for the PEA. We've got a whole series of internal trade-off studies that is looking at further optimizing that, potentially a regrind on the back end, still looking at some of the flotation options. So we'll continue to experiment to further improve. Or potentially further improve that. For example, that result didn't have a gravity circuit on front of the CIL, so we think there's more that we could look at and do there, and that'll ultimately move into the feasibility scale metallurgy next year. Showing it at a greater scale, doing some additional test work, finalising on a flow sheet for the feasibility study next year is what's coming from metallurgy.
On the theme of de-risking, you announced on February 9th that you were evaluating test mining scenarios for Ana Paula. So what is the thought process behind this? What does it look like? And why is it important for Heliostar, your shareholders, and potential suitors?
I think stepping back a step, I think gold companies have done, in my opinion, actually a pretty good job of creating value over the last couple of years, despite pretty tough equity conditions. The challenge that they've faced is the cost of capital has been so high that share prices have either been stagnant or gone backwards to deliver that, which doesn't the project works, but the business fails. We've tried to be, with our view that we're going to own this as a producer, we think about this a bit differently. And so obviously the warrant incentive last year was a way of trying to demonstrate that management's trying to be creative and look after our shareholders and ourselves. There's a selfish element to it, but it's mutual alignment in owning more of it to production. And the bulk sample has the potential to serve a number of options, which is why we're doing quite detailed work on it. It, from a technical and de-risking level, demonstrates that takes the decline out of the capex, out of the future capex, puts hands on the ore body. So there's no substitute for being in the ore zone for confidence and de-risking. It lowers the cost of infill drilling. From a growth perspective, which we'll get to, it's a good platform for the deeper drilling. The resource is open at depth. And from a financial engineering or from a shareholder perspective, it's the potential to advance the project without equity financing. We believe from a number of options that we're looking at that there's going to be more gold in the bulk sample, and the value of that gold is going to be more than the cost of doing it. So a great way of moving the project forward and de-risking it without issuing equities in tough equity markets. So it serves two purposes, as you touched on. First and foremost, the de-risking, but it's not lost on the potential impact to our shareholders of moving this project significantly forward without new share issuances.
Kind of switching directions to geology and exploration for a question here. Where in the stratigraphic package does Ana sit in relation to your neighbor Torex, whose past production and current reserves total 7.5 million ounces?
Yeah, we're in elephant country between there and Los Filos. These are big deposits, and I think there's a great slide that we have in our deck where you can see those mines standing on Ana and we're just at the top of that. So in terms of diving into the geology in a bit more detail, you could almost break the Guerrero Gold Belt into three areas. There's a basal limestone package. Think of it like a Great Barrier Reef or any coral reef, which is a great chemical sponge package. Then on top of that, there's a series of sort of deeper sea sediments that are variably reactive or not. In this case, in Guerrero, they're good reactive rocks as well. And then over the top, we believe there's an older belt with some volcanics that are also prospective thrust over the top. So we're getting quite into the detail here. As we understand, Torex's project is located in that deeper limestone. It's a classic skarn where the fluids come up and react and dissolve that rock. And we know that then evolves into the shallower levels and expresses a bit differently in the way that Ana does. That's why Ana has these unique widths and grades. Because of the host rock that it's in. So we've moved where we think that the setting, we think Ana is a bit shallower than maybe it's previously been considered. And the most exciting part of that interpretation is it means all that potential sitting under our feet. There's the potential that stratigraphically all of the Morelos complex is still to be found, or an analog that is still to be found under the open resource.
That's one of the things that gets me excited as a geologist, thinking about potential decline extension and setting up a platform to do some deep drilling, because there are a couple of deep intercepts that have grades and widths that are similar to the high grade panel that are open for expansion.
Yeah, some of those deeper holes, 13 meters at 29 grams, 40 meters at 6 grams. The reason the decline was being put in by a previous operator is because it has that potential. It's I'm very confident we can grow this to 1.5 to 2 million high grade ounces in the top 250 meters. Whether it becomes a monster like its neighbours, the decline will certainly help us answer that question, but it's got all the potential in the world to do that.
So in addition to targets at depth, if you're looking through the presentation, you also have some near surface targets that are parallel to the high grade panel. For someone that's maybe not familiar, they'll look at it and they'll see a bunch of historical drilling, and they'll think, where is there actually potential to add new mineralization here? Can you speak to that a little bit and why, explain the logic potentially behind those drill targets?
You can't add the M&I and inferred resources, but we've got 700 M&I and 450 inferred today. We think we'll ultimately grow from just expansion in the high grade panel and the parallel panel, this zone immediately to the north that we found, to somewhere in the 1.5 million ounce range. Ultimately, we'll try and get all that into measured and indicated. So I think there's ounces we can clearly add with a drill program this year. And where you're heading is what you saw at site. And this is kind of a flippant statement to make, but what we now understand about Ana Paula is it was probably drilled 90 degrees in the wrong direction. Now, I don't say that to be smart. We would have started exactly the same way as was done before us. The rocks dip to the west, you should drill from west to east. But we've learned that the controls on this high grade, this underground mineable mineralization that we're targeting is east-west. So they should be drilled in the other orientation. We added ounces in the high grade panel, understanding this. We discovered the parallel panel only 50 meters north that I think will be 100 to 300,000 ounces through this technique. As you step to the north, for more of these that have just been drilled on the wrong orientation and need a systematic north to south drill program, there could be 3, 4, 5, 6 of these. That's part of the excitement, that this low-grade halo has not been well explored for high-grade mineralization, and I think there's a lot more to come there. I'm not sure what that number is, but it's definitely going to be part of our 2024 drill program to put some holes into those parallel zones to the north.
So this is an election year in Mexico. What impact do you think this year's election and possible government change will have on the mining sector? Do you anticipate it causing any delays in approving your modification of the existing open pit permit to an underground permit?
I'm not a political pundit. I try not to be a pundit on too many fronts. And clearly, the law changes in Mexico haven't helped the perception of Mexico, and the electioneering certainly hasn't. Perversely, it's probably made a project like Ana Paula more valuable because of its permitted status. It doesn't have a material impact on our plans. We intend to complete the PEA and then submit the modification. And you can go back to our record, we'd modified Ana Paula from open pit to underground before any of these proposed changes were introduced. It's nice to be going with the tide instead of against it. Ultimately, our MIA modification, our permit modification, will be to reduce our overall environmental impact. We plan to submit that after the PEA, which we anticipate getting back in the second half of this year. So the election doesn't have a big impact on us. I think the likely winner is likely to run a well-organised government. So I think that's a beneficial for anyone dealing with any government bureaucracy. So I think the signs are positive. I sort of ignore the electioneering part of that. I think overall, Ana Paula, I don't think anyone can beat us to production, like major scale production in Mexico. I don't think the election has a big impact on that.
2024 and 2025 are going to be full of big catalysts for Heliostar. Can you walk us through your 2024 and 2025 plans?
So we have, I think, 2 pathways that we're pursuing. The first is the more standard. So we will deliver the PEA in the second half of this year. We'll use that to modify the permit, and we'll drill 10 to 15,000 meters of diamond drilling. That's our plan for this year. We'll provide a greater update on some of those timelines over the next 6 weeks, but that's what we plan to complete this year. That will roll into a feasibility study with aiming to make a construction decision and completing feasibility at the end of next year. Most companies give up time too readily, and time's a killer for the valuation of projects. It's something unique to the business proposition of Heliostar. For example, if you build the same mine in 3 years that you could build in 10 years, it's worth twice as much in an NPV8 environment. That's the power of moving quickly. So that's why we have this second stream available to us, which is to complete the decline using a combination of gold forward sale or debt or stream solely on the bulk sample. They're the options that we're reviewing. That would complete the decline, potentially give us the opportunity to continue to toll mill if we make that permit modification. So it opens up a lot of doors and a lot of optionality for the company mid next year. Pushing both pathways forward, we think is best for our shareholders, with an aim of making a construction decision at the end of next year. And you typically look at an 18-month timeline for construction. So we could be a 100,000 ounce a year producer in 3 years if we keep this aggressive timeline that we've been working to.
I mean, regardless of whichever timeline Heliostar follows, it's going to be an exciting project to follow this year. Either or, there's going to be a PEA, a resource growth, and additional drilling. Thanks a lot, Charles, for joining us on our first 3L webinar.
Thank you very much for having me.
We're going to find projects we like, and if I like something, then I can be confident that Mark and Kim and the rest of the team is going to support that decision.
We've been highly successful at onboarding many clients onto our platform already. The belief is based off facts.
Bebek, co-founder, chair, CEO, and director of Coppernico Metals. Can you give us a high-level overview of Coppernico before we begin, Ivan?
Yes, so Coppernico Metals is a base metal explorer in South America. The company has an asset that's well known to the street as Sombrero. It's a project that we went after since 2015 in a company called Orin Resources, and we spent about 8 years and over $30 million waiting for this project to come online, which it certainly is right now. We've got social access and are about to get our first drill permits. The company was spun out of Orin Resources at the end of 2020 with the ambitions of coming online with Sombrero and drilling. It took us a few extra years. COVID certainly played a role in that, but we're finally here at the perfect point of market to go explore for one of the world's largest, hopefully, copper gold discoveries and a possible extensions of a world-class mining belt in southern Peru.
Why is Peru an attractive jurisdiction for junior mining companies?
So Peru first intrigued us, because of the scale that it offers. Just a bit about my background. I've been part of a 5 million ounce gold discovery from zero in Ghana, West Africa. My partners and I felt that was a threshold, and Ghana has large-scale discoveries. And then we went on to Mexico and tried to repeat that success. And we ended up selling Caden Resources to Agnico Eagle in 2015. So from those two transactions, it raised our bar to look for something bigger. We met some gentlemen from Newmont, and we wanted to find something that would make a top 10 global discovery. And this feat is very expensive in terms of time and capital, as it's taken us about 8 years to get to this point. But we went after things that could move the needle, and Peru certainly checked all those boxes. Peru has had many presidents, I think 7 since I've been in country with Orin and now Coppernico Metals, but it's never disrupted the mining sector. It's never nationalized it while we've been there. There's never been any issues. There's long-term mining laws that have been in place, good, great mining codes. The only place I see improvement in Peru is on the permitting, and they've certainly made some recent efforts there to shorten some of those timelines to be able to get drill access permits in the exploration phase. The great thing about Peru, Chile, and Argentina, they're all somewhat competitive about getting capital and investment into their country. And Peru most certainly is leading the way, I believe, in terms of major mines and very favorable mining environment to be in. So scale drew us there. Grade, we still feel it's largely underexplored. And this comes down to certain areas of Peru that you cannot access socially. It takes time to get in there. And that's really what our story has been, is unlocking an 8-year effort to build really strong, great relationships with communities in a region that hasn't seen modern exploration prior by anyone else.
They've supposedly moved the 2026 elections in Peru to April 2024. Do you think this will impact your exploration plans at Sombrero?
Personally, I think there could be a change. There could be continuance. Every single province went centric, which is aligned with Dina Boluarte, the current president of the country. I think that going forward, whether it's left or right, it won't matter. Mining has never stopped in Peru when the elections have gone to the left or to the right. I think there's a really hard press in South America. You've seen it in Argentina. You're seeing it potentially in Ecuador here and Brazil. You're seeing a lot of the countries looking at the opportunity to really strengthen their economy through their natural resources and attracting foreign capital. So I think whether it's left or right, you're going to see a substantial support for the mining sector. And the changes that are being made right now are quite substantial and quite significant to bring us online. And whether there's changes again or not, we'll be well into drilling and will be somewhat immune to any kind of significant changes from a fundamental perspective. As far as perception goes, I think that we've all seen COVID. We've all seen, what's happened globally. We've seen economies excel and we've seen them contract, or contracting now, and inflation being an issue. And there's a lot of challenges out there. We're seeing it in these small communities away from the main capital cities. So I think that the one way they're going to solve a lot of this or help it will be by getting the mining companies, explorers online to bring more capital in the countries and to help communities the way we have. So personally, I don't think the change would be any different than the last 7 presidents in the last 8 years we've seen. I think we're going to strive ahead, but I think it's something to follow just in general in South America or anywhere. But right now, we think it's on a strong trajectory to going in a good direction. There's a shortage of mines, there's the need for more, and metal prices are starting to improve. And I think that's going to result in a country being somewhat supportive to the sector.
So let's talk about the flagship Sombrero project. This is a drill-ready copper porphyry skarn target. Walk us through the work done over the past 8 years to generate the drill targets and what geological data supports the targets.
We learned of this project back in 2015 from a gentleman by the name of Miguel Cardozo. Miguel was famous in Peru for being part of the Yanacocha discovery for Newmont, which is a 60 million ounce gold discovery. His vision initially was that the Andahuaylas Yari Belt, which hosts mines such as Las Bambas, Tintaya, and Tecapay, Las Chancas, some of the larger ones in the world, continued to the west by about 200 kilometers. And if you look at the name of the asset, Sombrero, it means hat in Spanish. And that's exactly what the case was here. Volcanic cover has covered a lot of the key intrusions and the limestone rock units that host the mineralization that make up some of those mines on the eastern side of the belt. So through some erosional windows, there was observed high-grade copper and gold, which was intriguing. A lot of majors looked at this back in the 2000 era, 2001, and it was perceived to be too young of a date of intrusions, or the volcanics were mapped Miocene by the Peruvian government. And no one did the detailed work and map these intrusions to see if they were occurring at the same time that Las Bambas and the major mines next door were occurring as. We came onto the project quite extensively with thorough work programs from 2018 through 2020. We had a chance to do geophysics, geochemistry, mapping, channel sampling, extensive channel sampling. And we were very fortunate that we also found some historical drill holes that were drilled by a steel company out of Peru named Aceras Arequipa, was looking for iron ore. And they had drilled about 8 holes on the eastern side of our first Sombrero main target, and they started to hit 110 meters of 0.5 or 0.58 copper gold equivalent. And those holes really fingerprinted the geophysics that we had done. They showed us not only mineralization in the oxide, but also in the actual sulfides with the magnetite exoskarn that was quite prevalent. And it gave us the confidence that our 10-kilometer long geophysical signature with multiple channel samples on surface and numerous rock samples was giving us confidence that the third dimension was really there. The appeal was scale. The appeal most certainly was grade. And we've seen in numerous areas, trenching as high as 0.67 over 110 meters, 200 meters plus a 0.5% copper on surface. So we got width as well, which is critical towards looking for volume. The real breakthrough was the age dating, and that was the last proponent of our technical work that we did. We got to take 2 samples, thinking that was quite confirmatory as a junior explorer. And then several major assigned CAs and came to the project, and they took about 25 age dating samples in various intrusions throughout our first few main targets. And they came up with all the same age and era, which is Eocene, as all the mines next door on the Andahuaylas Yari Belt, which really strengthened our confidence. It also identified polyphase intrusions, so multiple pulses of events of mineralization was pumping into the system. So this is really the true story. We are drill ready. We have a very ambitious look at our first target. We can drill about 20 to 30,000 meters and still be in our first targets over the next couple of years, without looking at additional targets in the pipeline and going to depth. And our targets are all from surface. The first 400 meters, our vision is to drill open pit, shallow mineralization targeting and see what we can come up with in terms of grade and width to see if it's comparable to what we've seen on surface in some of the historical drill holes.
So on that topic, what are the unanswered questions that will begin to be answered with the initial drilling, and what would you consider success from the first pass?
So the key target, when we simplify this down to the most simplest basic aspects, is the contact between the Ferrobamba limestone, various sediments and other limestone units, which are all mineralized on surface, and the intrusion that's interacting. And that contact point is where the skarn is going to form. We also have porphyry mineralization and targets adjacent to the skarn, which is substantial as well. But that key contact, the biggest question we have is what are the dimensions? What is the grade going to be, and what is the width going to be? And that's going to be really the multi-billion-dollar question that we get answered. The first program, unfortunately, will not reveal the entire scale of the project. This is going to take at least 2 to 3 years to go around the perimeter of these contacts that we've mapped and identified. And that's a really good problem to have. It really shows as something that could be as big as a Las Bambas or one of those major mines next door. But really the key answer we want to see is the grade and the width. And that's really where we start.
And so what would a successful result be for you?
You know, anything in the 50 meters of, you know, anywhere around 0.5% or better would be an excellent start. It would give us the confidence. If you're familiar with skarns, they are quite variable. They're some of the richest deposits in the world, and that's something that's really appealing to us in this environment. There's no shortage of copper globally, but there is a shortage of high quality, high grade copper. And so far we're starting with a lot of grade on surface, a lot of potential for grade. So as long as we see the width, we're not too concerned about the grade. And yeah, minimum 50 meters and a good grade around 0.5% copper in that range or better. And I think we're off to the races to something that could really scale over time.
The much anticipated social access agreement was completed in November last year. What does this mean for the company, and how has Coppernico helped to support local communities to date?
That's a great question. And it's, you know, it's a paradigm event for us. Very, very long effort to get here. You know, special appreciation to our SVP of corporate development, Christian Rios, and his community team that really made this happen. You know, we stepped onto Sombrero back in 2015, and we started to see the potential early. We see a lot of probable evidence that there could be a major high grade discovery here. And what we did was we took on the attitude that could go the distance. This could be a major mine. And from our past experiences in Ghana, West Africa, and Mexico, we've always thrived with the communities. We've been innovative with our approach, and that hasn't changed. What Christian and his team did was they brought in Agradias, which is an agricultural program. It's where the government funds certain programs that we sponsor, and they provide grants. The community also invests into these programs. Our project's at about 39 to 4,000 meters. So there's a shortage of iron, red meat in the Andes. And that's where we started, bringing in French cows, Australian lambs, and eventually fish farms and various other agricultural benefits to these communities. And I think that's something we're most proud of. What we definitely are to date, because the community success is truly our success. And that's working both ways so far. But they got a chance to know us, and we got a chance to impact them in a very sustainable manner going forward and get to know each individual member of this community. So that was a paramount effort by us. It took longer. It was way more expensive. It was very tough on shareholders to wait this period of time for it. But the prize was big enough and the opportunity probable enough for potentially for this big discovery that we're going for, that we were happy to do it. And no matter what we find or don't find, these communities will benefit for decades to come. They now have farming at elevation in the Andes, and that's something we're very proud of. What it does for the project, it allows us to provide jobs, which is another benefit to the communities, and to conduct our first ever drill program. So where we are today as we do this interview, we are in the final stages of completing our drill permit, and we should have it. We are hoping with great anticipation to have it by the end of this month of March 2024, but we see no more hurdles in the way except for the administrative approval of the permit going forward. So very, very bullish that we're going to be able to turn a drill here within 60 to 90 days of as I'm speaking with this interview, and looking very forward to it.
How many pads holes will that permit allow?
Yeah, so we have 38 pads permitted. We can drill 48 holes, and that's a remarkable start to something of this consequence. As we start drilling, and the moment we start to see, you know, the success we're looking for early on, we'll apply for a much more advanced permit. We're also working on neighboring community access agreements on robust targets that we plan to bring in the pipeline behind the Sombrero main target area. So it's going to be a perpetual timeline of targets to go after, and but 38 pads with 48 holes is where we're going to start, and that'll give us a significant answer to the big question: is this really that big, large, scalable, mineralized skarn porphyry system, much like Las Bambas and Tintai and some of the mines next door? And then that's what we're really looking for here in the not too far future.
So you have two ex-BHP vice presidents on the board of directors, with Keenan Jennings joining in January this year. What is it about Sombrero and the management team that has given them the confidence to join the company as directors?
That's a great question. And, you know, the one thing you cannot buy, or two things you cannot buy, is time and experience. And in my career, I followed some incredibly great mine finders, and I've learned from them of how these mines are found. As I've mentioned to you previously in this webinar, there's been several age dating samples taken by majors, and there's been majors who pursued this asset with us for the last 4 or 5 years. Quite obviously, BHP is obviously one of them, with the head of exploration from BHP as of last year, retiring from BHP, joining our board here in January and investing into the company. You know, both Antonio and Keenan Jennings bring a tremendous wealth of experience and knowledge. Antonio Ribas's background at BHP was VP of Geosciences, which is quality of the exploration effort, quality of the technical work being done. As a financier, that's something you want to underpin all of the dollars that you're spending in the field. Keenan Jennings is very generative, very deep technically, but also has an MBA. He has a very good commercial mindset towards exploration, and he brings in a very fit to purpose approach. He's very much about, let's get to the quickest path to the most important answer, and let's save as much time as we can, but drill this intelligently in it. And his big thing has been, let's scale the discovery over time. So we have a combination of quality and visual or visionary thinking towards the commercialization of a discovery here. And when you sit down with them and you listen to them talk about how they'd approach the project, what kind of strategies they would take, you really feel the presence of BHP in the boardroom in terms of the strength of the big exploration efforts they've made. And the last part is they've seen almost everything around the globe of interest in terms of copper type of discoveries like this, and getting that confidence from them to join the board at this juncture, right as we go drill it, is about the best case, you know, for us to get that experience in at the right time as we go and explore something that could make, you know, as we're trying to find one of the top 10 global discoveries for copper at a time when copper and gold are looking like they could really perform for investors over the next few years.
So Coppernico is an unlisted reporting issuer. When do you plan to list the company on exchanges? How much cash do you have on hand? And how much do you need to raise for the initial drilling program at Sombrero?
We waited patiently or impatiently for the social access, which we got in November. So technically, once we got the access and we could resume work, we could list the company. Work is active, ongoing on the project right now. I'm getting updates daily from the field. There's a lot of really positive interpretations coming back on new perspectives of existing and new targets, which is really encouraging to hear as we look for the final drill permits. We are in the last few dollars of our treasury. We will have to go back to raise capital in April, which is next month. But we plan to raise at least 18 months of working capital, which is about $8.5 million, including 3,000 meters of drilling. And that will give us a very solid footing as a bare minimum. We've talked about this project very lightly in the past few weeks through PDAC, and we're seeing a lot of interest in the copper space. And if we take more capital, it's going to be price contingent and investor qualified, you know, to make sure we can keep adding to our registry here and come out with, you know, my perfect world would be multiple phases of testing on the first target without having to go back to market for more capital, so that investors could benefit from a discovery without the need to raise more, or if discoveries take time, without any significant pressure on the company there in terms of performance. We are very shareholder focused because we're very aligned with shareholders. I've made an investment into Orin of about $5.5 million and another 400,000 or so into Coppernico since the splitting of the companies. That's the way I view this company, as a major shareholder, and I treat it that way, and that's the way we're going to treat it when we come to market. So we're looking to be strategic with our raise that we're going to do here in April, as we prepare to do that as the last final step to list our company, and we're going for the Toronto Stock Exchange to list there, and that's why the 18 months of working capital.
Let's talk about the commodity at heart here. What is your view on the copper market right now?
If you follow BMO, if you follow several analysts around the world, you know, and I think in short, the world was not ready for the copper demand that was coming from the electrification, the modernization of the planet. Populations have more than doubled in the last 30 years, and the pace of the current modernization, electrification is quite substantial. So we see a very, very strong demand curve. I think everyone does, everyone sees it. But at the same time, there is a shortage of quality copper discoveries. We like to look at the copper market as, you know, price sensitive, more mines come online or not, but mines are not. They're very slow to come online. They take time. A discovery like we're looking for could take anywhere from 20 to 30 years to get through social permitting after extensive drilling, which will take quite a while to reveal the opportunity. And there isn't many sombreros around the world, or there's very few that I'm aware of, or mines that could come online. The second major factor is the top 10 copper producers globally. 3 of them will start to expire in the next 15 years. And when you think about that comment and the other ones that are past halfway in production, and you think about how deep these pits are getting and how expensive it is going to take this copper out of the ground, and then you think about higher copper prices and lower grade mines possibly coming online, you're going to have a very, very slow path to supply to meet the demand needs that are accelerating as we're talking here today. So my view is copper is going to be a perpetual performer. There's no easy answer. It's a very slow market to satisfy from the supply side. And quality is the thing you have to focus on, not quantity of copper out there, because only the quality mines will make it online, and they're the only ones that are going to be impactful on the future demands of copper. So extremely bullish on the outlook of copper. I believe a deficit is anticipated in copper next year for the first time in the past decade or so. And I think that will be heartfelt in the copper price. So our timing could not be better of coming online with potentially a major copper, high quality, high grade copper discovery globally.
Why should investors follow Coppernico this year?
If you take Coppernico from today where we are right now, you're capitalizing on 8 years of time. You're capitalizing on some brilliant geologists that found an opportunity that was never explored before, with enough evidence giving it the probability for grade and scale of a discovery that could make potentially a top 10 copper gold discovery globally. So you've got everything working from the fundamental side of the project as well as the commodity, but you get to save the time and be part of something that's the most coveted right now, which is a world-class, high-quality copper discovery. So you get to take advantage of time, money spent, and drilling some of the best targets globally. And that's where we differentiate ourselves with any other junior or explorer globally, is that I'm not aware of another project that has as much grade, as much scale, and as many targets as we have to date. And that's what you get to be part of if you become a shareholder in Coppernico going forward.
Well, thank you for joining us in our first 3L webinar, Ivan. We look forward to the inaugural drilling at Sombrero and the upcoming exploration season in Peru.
Thank you, we as well. Very much appreciate it.
At 3L Capital, you know that you're going to have access to probably the best investors in the mining space globally. And we have access to open those doors. We know we can open those doors. We just need to bring the best idea that we have in our Rolodex.
This has exceeded my expectations, and that's what we want to do for our clients as well.
Everyone that comes through that door has a dream. One day, we're gonna wake up and somebody's gonna be like, wow, where'd you find that idea? And somebody's gonna say 3L Capital brought it to us.
Thank you for joining us today. I'm here with Louis-Pierre Gignac, CEO of G Mining Ventures. G-Min trades on the TSX under the symbol G-Min and on the OTCQX under the symbol G-Min-F. Their current market cap is $895 million.
G Mining Ventures is a precious metal focused company. We're currently building the Tocantins project in Brazil, which will be Brazil's third largest gold mine when we're in production. Obviously, we're looking to use TZ as a platform to grow into an intermediate gold producer with a medium-term objective of reaching 500,000 ounces of production, with additional mines brought into the company and growing a portfolio.
So G Mining Services has built mines in Ecuador and Suriname, and now G Mining Ventures is building a mine in Brazil. What has your experience been in Brazil compared to those other jurisdictions?
For us, it's been very positive. Obviously, there's the language barrier that's Portuguese, which for the most part has been something that our people have overcome fairly well. Brazil has a really strong mining culture, so we're able to recruit, competent people that know mining, and we're also able to procure a lot of what we need for the project within Brazil. So whether it's actually mill components or consumables, most of it can be procured within country, which is a tremendous advantage. So I think it's one of the leading jurisdictions, to be honest, in the Americas, and definitely in South America.
What percentage of your workforce, once you're producing, will be local?
Yeah, so like for the construction part, this is one of the projects we've had the least amount of expatriates on a project. So we had about 116. On other projects, we would have up to 250, even 300 expats. So when it comes to the operations, a lot of those expats are really there for construction. So we might have a dozen or so remain after for operations. So very, very low number.
2023 was a big year for advancing TZ. You're 80% complete and trending on time and budget. Can you update us what is happening on the site right now?
So we're still busy with construction. Obviously, there's still 20% to go. So most of the construction right now is focused on the process plant area. Things are progressing well. Our primary crusher or reclaim is largely complete. Grinding mills, which is our critical path, the installation is ongoing and that's going well. So we're in the process of installing ring gears, lubrication systems. So really into the finer details of the grinding circuit. Our tailings facilities are largely complete as well. We've actually demobilized our earthworks team and concrete teams with most of that work behind us at this point. The focus right now is really on operational readiness, getting ready to start commissioning activities, which will be essentially starting in the month of March.
What are you most proud of to date?
I think what I'm really happy about since we essentially created the company is kind of the timeline that we've stuck to in terms of actually acquiring a project, doing a feasibility study, putting the financing in place and kicking off construction pretty much as, we had set out right when we created the company. So that's one of the things I'm most proud of is, it's always difficult to get the timing right in the mining business. Things can take a long time for projects to advance, but that's really what I'm most happy about. And now that we're looking towards commercial production in the second half of this year, we'll be generating cash flow months away at this point.
So commercial production is planned for the second half of this year. How much ore has been stockpiled to date, and how much gold do you anticipate the company will produce in 2024?
Our mining pre-production activities have been ongoing for a little while now. The initial months was mostly focused on generating waste from the pit for different construction needs. And since December this year, we've been mining ore. Now that we have our own assay lab on site to do grade control. So we stockpiled at the end of February, we're up to 740,000 tons of stockpile ore, and we're looking to stockpile up to 2.4 million tons by the time we're in commercial production. We haven't put a formal guidance out. If we go back all the way to the original feasibility study, which was in February of 2022, we're maybe 1 month, we started maybe 1 month behind that schedule. So we're looking at somewhere between 70 to 80,000 ounces this year.
So let's talk about your cash position and free cash flow. So you're fully funded to free cash flow. How much cash do you have on hand, and what's the remaining project spend, and when do you expect to achieve free cash flow?
What we essentially communicate to tie in with our financials is kind of our position at the end of the year. So we had 52 million US at the end of the year, still 75 million term loan from Franco-Nevada to pull on. So that gives us a total capital available of 127 million. We still have 81 million to finish the project, to which we add working capital requirements. So we've already invested in building up inventories, but we still have another 12 million or so to spend, plus corporate costs for another 14. So at this point, we're sitting on about a 20 million cash buffer to get to positive free cash flow.
And that doesn't include the potential exercise of warrants later this year.
That excludes the warrants. So if those warrants could get exercised, that would bring in essentially 70 million Canadian. And all the numbers I'm speaking previously were all US dollars. That would bring in 70 Canadian million in September, should they get exercised. So
the 2022 feasibility study showed an AISC of $681 per ounce. And in a September interview, you mentioned it would likely fall in the $700 to $750 range with inflationary pressures. Do you believe the project is still on track to achieve this? And what costs have varied the most compared to the 2022 feasibility study?
That's still a range that applies based on our expectations. So really on the mining side, we're feeling comfortable with our unit costs because we've been mining for several months now. On that front, it's mostly the fuel that's a higher cost for us, with the fuel price being higher than our feasibility study assumptions. But we've had wins on the process plant side with electricity costs being locked in at a more favorable rate. And we've also secured our reagents supplies contracts for all our reagents and grinding media, which is coming in like within 2-3% of our feasibility study costs. So yeah, on a net, we're looking at maybe 5 to 10% higher than what we had in the feasibility study.
Do you see fuel costs staying flat, or are they trending down?
Yeah, they were trending down slightly in the last few months. So that's kind of trending back in the right direction, but generally higher than what we had planned.
G Mining has an excellent track record of building big mines on time and budget. In the past, these projects were handed off to mining companies to operate, but now you will be operating the mine. What steps is the company taking to prepare for a smooth transition between construction and operation? And what do you anticipate will be the biggest challenges for G Mining in the early stages of commercial production?
Most of our people come from an operating background as well. And like I was just mentioning, like the mine has been operating 24 hours a day since April. So that whole team that's been put together for the mine is just going to continue on for operations. So there's no real change that takes place there. Same goes for all our G&A departments. So HR, health and safety, accounting, supply chain. They've all been put in place to support construction and actually get downsized somewhat to support operations going forward. So there again, like we're already staffed up and running this thing. Really the key piece now is the process plant. We've essentially recruited some very strong people, Brazilians, to head up the process plant team. And that's the team that we're finishing our recruitment for as we're getting ready to start those, trainings and getting ready for commissioning. So we're feeling very comfortable on that front as well. But yeah, in terms of your point, the key challenges is really more on the process plant side. And so what we've done is we've made sure to have a really strong commissioning team. So we'll have additional experts brought in to support the operations team as they look to commission. And that's really just to provide additional comfort, all hands on deck approach to deal with small problems as you start commissioning the plant.
You want to grow G Mining to a 500,000 ounce per year producer in the next 5 years. Merk is focused, an asset that can produce, let's say, a minimum of 150,000 ounces a year or better, and ideally construction ready by the end of next year. How many projects do you think fit that criteria, and how many have you completed due diligence on, and where are you seeing, feasibility or pre-feasibility studies kind of falling short?
We're very much in M&A mode of looking at projects. What could be the next project that would be a nice fit for us to bring into the company? So as you point out, having that ability to redeploy our construction team and effort towards building another project next year when we're generating cash flow would be ideal. We're not limiting ourselves to essentially construction ready projects. So if there are projects that take a little longer to mature before they're ready for construction, we're obviously looking at those as well. We've done over a dozen due diligences on various assets. Most of the time we do, our due diligence focuses on geology and making sure that we're happy with the nature of the ore body, how it's been estimated, because normally that's the part we can't fix. We're kind of stuck with what nature has provided us. Normally, I would say more often not, probably half of the projects don't pan out right from the geology side. And then after that, it really boils down to what the economics are in terms of CapEx, OpEx, and being able to generate sufficient returns once you build in acquisition costs. So that's really the challenge for us. That's how we look at M&A. To create shareholder value, we build in acquisition costs and all the CapEx the way we estimate it, which is something that's realistic. And that's often the challenge with junior companies is they end up putting promotional numbers in there to make the numbers look nice. But reality needs to sink in, and that's what we're looking to execute on.
When you're doing this due diligence and you're in the data room, are you guys creating your own geological model and block model and doing a full brand new estimate?
Oftentimes we do, or at least we'll run checks to make sure that, if we run different estimation parameters, different grade shells, different, sensitivities to it, that we come up something close. Or in many cases, once we get further down the line of due diligence and it becomes very serious, and we want to start making it our own, we'll actually build up a resource model really completely from scratch internally.
What are G Mining's exploration plans in 2024? When do you start to ramp up exploration drilling at and around TZ? And could you ever see G Mining making a strategic investment, say like a 9.9%, taking 9.9% interest in an earlier stage junior exploration company?
So this year we're planning to spend about 4 million on exploration. So we'll have a first drill coming in March, so starting up fairly soon. And we plan to bring in a second drill in June to be able to drill more meters. So this is really building off kind of the exploration effort that was done last year, which consisted of flying geophysics, completing soil geochem, really gave us a better baseline information on the whole land package. And with that, I think, we have something like 19 target areas that we want to further investigate. So we'll likely do trenching, field work, and follow up with some drilling on several of these. So this year we're going to focus on about a 5 kilometer radius around our project. With the land package that we have about 35 kilometers of strike length on this trend that now clearly shows up with this baseline information we have. So that's really the focus. We'll be spending, about 4 million, which we feel comfortable with given our current cash position, but are obviously treating that as discretionary capital until we're generating our own cash to invest in exploration. Your second part of the question of making 9.9% strategic interest, investments in companies, that's perhaps something that we could do, just to take a stake in companies that are really progressing well, but maybe don't have all the right ingredients yet for us to make a full acquisition, but at least position ourselves to be better positioned to maybe take it completely out at a future date.
And I'm just thinking in my head, there's a lot of good projects I think that are out there, but by the time they get their permits and would be construction ready, you're talking 2030, and at their valuations now, it seems like there's some good opportunities out there.
We're seeing this disconnect right now between gold price and equity valuation. So yeah, it's an interesting time to take positions at this point.
Gmining has created significant shareholder value. What would you say to those investors who feel like they've missed the opportunity to get in early, and what can we expect from Gmining over the next 12 months?
I would say there's still upside, definitely in our share performance and in re-rate as we get closer to commissioning and being in commercial production. So I think there's still upside to be had in that period. And so also I would say there's lots of exploration upside with our land package that investors would be benefiting from from a long-term investment perspective. And then maybe thirdly is just the fact that we're looking to put in production this mine in a gold price environment that is reaching all-time highs right now. So definitely a lot of, gold price sensitivity to the upside. If I look at, some of our valuations from our feasibility study, we didn't even have sensitivities up to 2,100, 2,200. From our project feasibility NPVs, we're looking at, something in the range of 1.1 to 1.2 billion US. So I still feel based on our market valuation, we have lots of room in there to grow.
So our 3L's valuation for Gmining, we calculate at $2,100 gold, we calculate a net asset value of 1.6 billion and a 0.63 P/NAV multiple. And, we believe with the track record of Gmining, and where you're at with the mine, we would expect you to trade around 1 P/NAV multiple. So there's still, I think, excellent upside for investors. That would be, approximately 50 to 70% upside from the current share price, which today is $2.
That's a good reference point and a good range of upside that's out there. I think.
I don't think investors have missed the boat on Gmining. So thank you for joining us in our first 3L webinar, Louis-Pierre, and we look forward to seeing TZ progress towards commercial production later this year.
I look forward to providing further updates as we go, and thanks for having me.
The smaller CEOs see the world changing. The bigger banks are maybe not paying as much attention to the smaller guy. And I think there's a real opportunity to find something brand new, taking that person from, a neophyte into something miraculous on a global scale is the dream here at 3L.
I'm here with Jessome, CEO of Silver Tiger Metals. Silver Tiger trades on the TSX Venture under the symbol SLVR and on the OTCQX under the symbol SLVTF. Their current market cap is $55 million Canadian.
Ouch.
Glenn, can you give us a 30-second high-level overview of Silver Tiger Metals?
Look, thank you, first of all, Steve, for having us. Really looking forward to sharing a little bit more about Silver Tiger. We've been in Mexico for a long, long time, our team, our technical team in particular. We built pretty well every project we've touched over 25 years and end up either being a mine or sold to a major. That's a pretty good track record. We all know the success rates for junior exploration companies is very, very low, far less than 1%, I think. Because of those relationships, and you want to know the journey to the Tiger, we see things because we've been successful. We've worked with the Mexican government, the Mexican people for a long, long time and brought great success and prosperity for them. We're a Mexican company with a small capital raising arm in Canada. That's really the way we look at ourselves. And so we see things. And Tiger was brought to us by our technical team of 30 years. They went and looked at the project and said, Mr. Jessome, you need to get that for us. It wasn't for sale. It was a publicly traded company, but we went to work and were able to purchase that company and delist it for $11 million Canadian. Why? It was because we looked at some drill cores, because we looked at the technicals, but it was history. There's no new discovery in Mexico, Steve. None. It's either under around the head frame of an old Spanish mine, but more particularly for us old American mines that ran from 1910 to 1930, they all shut. Great Depression. Tiger was that. We got all the mining records for this old mine, 20-year mine life, 1910 to 30. It produced 100 million silver equivalent ounces at an average grade of 2.5 kilos in 10 years. The cutoff grade was 1.2 kilos. They just dropped their tools in multi-kilo ore and went home. And it sat there. And we knew if we drilled north and south and underneath it, it would go well. And a couple 100 million silver equivalent ounces later and pre-fees almost done, it went well.
Since acquiring the concessions, what have been the key milestones in the project's development? What are the key highlights from 2023?
Well, if you look at 2023, we go back, we started really on this and call it 17, 18. The first part is really, really a lot of work. You need to drill a lot of meters. So we can't just say 2023, because to get to 2023, there was 6 years of drilling. So we've been 125 to 150,000 meters in this thing already. That took a lot of capital. 2023 was a kind of okay, we've arrived. We've drilled all those meters. Not a lot more to talk about. Drill holes are only of any value if you can get to the economic test, the PEA or the pre-fees that says that thing's going to make money. People give you the money because the return is so good. That being said, 2023, we raised last February another $18 million in the bought deal financing. That had brought our total for the 3 years before that to $75 million bought deal financing, which allowed us to tell you what we accomplished in 2023. I think it's very important to know who gave us that money. I consider them very smart. They're my biggest shareholders, and I'm not just saying it because of that. Steve Land at Franklin Templeton, Maria at Sprott Asset Management, Peter Maletis at Merk, Joe Foster at Van Eck, Fabio and his team at Fourth Sail, Ono over at McKenzie. Those are top drawer is the right word, precious metals investors. They've given us that, and they're pleased with where we are. Nobody's pleased with any junior miner or developer in their valuation day. They're just not. They can't be. But they look longer than that. They know their return is when we build the open pit and the underground mine. So 2023, $18 million bought, tough market to culminate the 75 over the last 3 years, and got to work. Finished the work we'd already done. September of 2023, I'm not going to get into all the ounces. We don't have time for that, and your viewers don't care. Let's just call it almost 200 million silver equivalent ounces delivered in a MRE, a mineral resource estimate update. Call it 110 in the underground, 90-ish in the open pit portion of the deposit. Boy, we'd been doing all the work as we get ready to deliver the MRE, because 2 months later, we delivered the PEA on that resource. You can't just do that in 2 months. That's a year's work. So you have to work side by side. And boy, that was a pretty impressive year. PEA, I'm just going to give you a couple of numbers, just so it'll catch people's attention. Almost a $300 million NAV USD, 56% IRR, payback in 1.7 years, $59 million US investment leads to that return, makes about $500 million over the 10 or so year mine life, USD after tax free cash flow. So an amazing start. And that first couple of innings of the game that will be El Tigre, if we look at baseball analogy, the other 7 or 8 innings will be the transition to the permitted underground we have. And we can talk about some of those things.
It's been really impressive, the fact that you were able to raise that money and have such strong shareholders and advance the project to the stage it's at now. From the results of the PEA, how do they align with your strategic goals and vision for the future of Silver Tiger? Where do you want Silver Tiger to be in 5 years?
That's a perfect question. So let's look at our, and we can talk, I think we have to talk a little bit, if we're going to do that, about what 2024 looks like already and what it will look like by the end of maybe the year, because you're always moving the project forward. Look, what you said is, and with great respect to all my peers, we watch the market. It's been tough. We raised $75 million for this company, all bought, no warrants, straight up from those people that are very smart, and allowed us to keep going. If you look over since 2020 and you look at who's raised the money since that period of time when the market got a little bit of a bump of good fortune, not a lot's been raised. So a lot of projects have stopped. We like to say, even in the worst of times, get to the point where you're ready to build a mine, because those good times will come, and that's when you're there. So it's been very fortuitous that we had that support, and we've used it very well. What we see right now as the next step is I can't build. Look, I think we have to talk about how we see Mexico, because we've always built mines the same way. We always are working on epithermal systems. In our experience, there's always a stockwork at the top. That's the pit we're talking about. And then you go underground to follow that high-grade silver vein to great depth. Easier mining pit drives huge cash flow for small investment, because you know what? You need all that to go underground, because underground's hard and it's expensive. So we've always had the same game plan for this project from the beginning. Get the pit, get it done, get the underground ready while you're building the pit. So when that cash flow, $50 million USD a year, free cash flow from LT grade, just the stockwork portion, you drive in the underground. So that's the plan, and I'll lay it out here in the next year. Number one, I can't build in a PEA. It was robust. It was beautiful. You're talking $11 silver, or call it $800 gold. Those are your costs. That's the lowest in the, that's lowest in the industry. That's why it generates such great economics I talked about. 2-to-1 strip, high grade for Mexico, 0.7 to 9, where most pits are 0.25 to 0.35. I'm using gold as the equivalent there. So now I need to go, okay, I need to get that 59 million bucks. I need to get there. So the next thing is, as you saw, we put an MRE out in September and a PEA in November. We didn't start the PEA in September after the MRE was out. Started a year before. Same thing with the pre-fees. You've got to do all your work. So last spring, summer, we were starting the drilling for the pre-feasibility study that we will release this summer. So think about that. 30 or 40,000 more meters, all drilled. We got 3,000 left today. It's all bought and paid for. We'll finish that off this summer, come with a PFS. That PFS is what the bankers, and I'm engaged with them, we'll talk about that in a minute, tell me that they will actually lend in on. A lot of times you got to go to feasibility. Feasibility are for some of the bigger banks, especially, the Royals and the Nationals, et cetera, the BMO. We'll use a different tier of lender, very sophisticated resource lender. But why we were able to really hone in on and think we can finance this, and I'm going to tell you why and who told me he thought we could do it in a second, because I need to introduce you to this individual who's now working for us, is the payback period is 1.7 years. That's incredible. Like, you just think about that. You got all your money back, your 59 million USD cash capex in 1.7, and then you're just making money. The banks like to get their money back quick. So let's say they're thinking about, how do I know I'm going to get my money back in 2 years? In pre-feasibility study, maybe I can't. But what we've done is we've got an amazing starter pit. In that pit I talked to you about, it's 50 million tons. The first, call it 10, 11, 12 million tons are in a starter pit in the center, which was absolutely just a gift for us. It's zero strip, and it's almost 1 gram per ton gold on what we saw in the PEA, 80% recovery. So that's why you get that 1.7 year payback. We've taken, as part of the pre-feasibility study, you'll see, most important thing we did was we drilled that entire first 2 to 3 years off. So now we have a measured resource there. So that's really what our lenders will hang their hat on and say, yes, pre-feasibility study is enough that we can fund this and let these guys get to work. So you're going to see that pre-feasibility study. I'm going to tell you what it's going to do. You saw the numbers in the PEA. You can go to our website and see all that. But on the pre-fees, we put a press release out. Usually on a pre-feasibility study from PEA, you know this, Stephen, it's your game. You go down because you can't include inferred. So we had about, of that 50 million tons, 10 million tons of that were inferred. We've moved that. We're going to move that all into indicated. That was important. The first 2 or 3 years measured, very important. But really, and I put it in the press release last week, the drilling to infill this has gone very well. We think we're actually going to increase the metal and the ore by 15 to 20%. That's incredible. Stay tuned for that, but it's looking very well. This pit and the pre-feasibility on it is going to be better than we thought. So that'll allow us to get the lenders to give us the money. you may want to ask me about the lenders or how I think I'm going to fund it, but if you don't, that's fine. But I'm not kind of steering your questions. I feel like I'm dominating this interview. It's your show.
So that's no, that's really great news, and that was my next question: is how do you plan on financing the build, and what options are you considering, and when could you generate free cash flow if everything goes according to plan?
Beautiful question. So what we did is, as you see, we're always ahead of ourselves, and you have to be. You can't say, I'm here now, I'm going to put out the PFS, and then I'm going to find the people to loan me the money. So what we do is, starting in November, right after the PEA came out, we went to let's call the 5 lenders that we'd like to get the money from. And we met with them, and I met with them again at the BMO conference a couple of weeks ago, just before we went to PDAC, and said, here's what we have. You have to be willing to know that we're going to deliver 2 or 3 years of measured. You know what it's going to look like because you look at it in the PA. And if that's good, then we're going to sign CAs, and we're going to put you in the data room. And as we do the pre-fees, January, February, March, April, May, June, July, until we release it in summer, you follow along. So we've got 5 in there now. They're following along. They're doing their work. And there was a couple that said, well, we'll get it done and then we'll go in next fall. I said, you know what? That'll be too late for you. So, because I'm going to there's 5 that are in there now that are going to make a decision when we're ready. So that's that process. They're not going to give me 100%. We all know that. Would I push for 60 or 70? That's aggressive. But then we go and look in a better market, a little bit of equity. I mean, I've got some of the streamers chasing me around, and I'm kind of parked out for right now. Not my first choice, but we'll just see where we're going to look. We've raised 75 million for the last 3 years to drill holes from very smart people. Do I lose any sleep at night worrying about getting the $60 million USD to build this? Zero. Maybe that'll tell you, audience, something.
Yeah, no, that's great. So now a bit of a tougher question. So navigating the permitting process and ensuring regulatory compliance are critical for the success of this project. Can you elaborate on the current status of permits for the project?
That's a great question, Stephen. And it leads into a segue, if I could. If I had a minute to go there, because as we went through 2024, we stopped at pre-fees, stock work, beautiful. But remember, that's the start for the project. That's the money generator for the underground. So in the underground, and I think we talk about that because it leads into permitting, when we bought the project, the public company, they had basically a permit issued for the underground, for some of the Rasaga, tailings, et cetera. And that was important to us. And we've kept that permit, and we've kept that current, and we've actually done work to make sure that we're progressing that on the underground. I could go build the underground as a right today. I could go do that as a right today. That's not the right business decision for us to make in our experience. The right way to do with these epithermal systems, flowering epithermal, is stock work, use that cash to go underground. That's how you hit it out of the park. So we're still on that path. But the underground, we're not forgetting about. Remember, that's permitted, and that's going to play into the other permit, and I'll come back to that in a minute, leading back to your question. But we're going to drive that underground. There's 110 million ounces already drilled off there. It's beautiful. And that's the first inning. That's 3 or 4 kilometers of 25 kilometers. We'll be drilling El Tigre underground for the next 20 years. We mean that. We know that because we've had 20 or 30-year projects in Mexico. They're still in production to this day. But what we'd like to do now is once we get all the drilling done here, that'll be leading to the summer. Next fall, we are going to refocus back to the underground. We didn't forget about it because the results we were getting were incredible. Not only high-grade quartz veins, but if you remember, we discovered a shale zone where we were drilling stuff 10, 20 meters of a kilo. And then that sulfide zone, which we just had a year drilling in, which is already 750 by 300 by 30 or 40 meters of multi-kilo ore in some cases. So we got to get back to drilling that. We're going to do that from underground. We've developed underground into the guts of the old mine. So that'll be 100, 200 meter holes instead of 500 meters. Stay tuned for that in the fall. And once we get that done, we're already doing the metallurgy for that deposit, for the underground. All that work's going on now. Expect a nice PEA as the first economic test on the underground early next year. So you want to see what we're doing. It's not just let's do this. Let's get back to that, which we're already permitted for, and drive it ahead. What was very interesting, and I want to mention the guy's name here. Permitting for the stock work. Francisco Albalez, we hired in May. I need to talk about him. He was a very important hire for the company. He's the builder. The last 12 years in Mexico, he ran Mexico for Argonaut. Nothing in Canada, just those big heap leaches. And I'm talking about, St. Augustine, Patala, 40, 50,000 ton per day operations that just made an amazing amount of money. They were open pit, 0.25, 0.35 grade, 5 to 6, 1 to 1 strip. Ours is 2 to 1 and 0.7 to 9. We needed someone with that experience to come in and say, I'm building it. So we got him to agree to leave there in May and come with us. What a coup. Now, he also not only ran those, he permitted them, developed them, built them, and then ran it all for Argonaut for the last 5 years before he joined us in Mexico. So he basically said, here's how we're going to tackle the permitting. We've got an underground permit. So you've got all your environmental approvals for that. You've got your seminar approvals, you've got your cyanide, your Merrill-Crowe, all of that. He said, we're going to take all that and we're going to build our plan and engineer stockwork zone to use all of that. So we actually, in the summer, July, we filed our application to amend our permit to include that. That's going through the process. And basically, we expect, as we always have, to get that permit issued so that we can build this the way we want. Stockwork first, underground second. Do I think I'm going to get my permit issued before this election, which is on June 2nd, I think? No. Do I need it on June 2nd? No. I'm going to need it later next year once we have all our work done. So, that's where we are in the process. There's been a lot of information, let's call it, coming out of Mexico, especially since the election started this year. We all have watched elections. Canada, not very exciting. US, crazy. I'm sorry, I hope the US listeners don't. I mean, it's just, you see it, it's whoa. Mexico's the same, maybe even a higher level. It's very passionate and people are saying things on both sides. We are just going to let that, as we have, how many elections? 6. We've been through 5. So this will be 6. Our team in Mexico. We just got to see what happens in June, and that's coming. If there's any questions about what we think about Mexico, I'd be more than happy to ask. We're not leaving. We're doubling down.
I was going to ask, what impact you think the election will have on the project, if there is a government change or it isn't a government change or leader change.
So here's where we are, and I'll be very, very, very kind of try to put it in different boxes. There are 2 parties. Maybe some people don't know that about Mexico. They just read the headlines or they read some of these. Look, the news coming out on the internet and social media. And I say I left on my kids because I'm not social media that much. Like they're on it all the time, Snapchat or FaceTime, and they just go crazy on me. Like they just don't even say it. I just embarrass them. But what's out there. So all the information's coming out, and really it's very unfortunate because people will weaponize information. We're now seeing emails coming from our competitors, our peers, not in Mexico, but mining in Mexico is over. You shouldn't put another dollar there. It's terrible. It's being nationalized. They're going to take it over. And oh, by the way, I have these 3 companies in Canada you should put the money into. Come on. So we're in a crazy world. And you know what? We've been just leave it until July, August. That's when we're going to start thinking about it again. But you got 2 women running. AMLO, we all know who he is, I think, not just because of mining, because he's a very populist. He does a lot of talking. He basically can't run again. Just a little education here, because some people don't know. 6-year term in Mexico, 1 time, no more. So he will retire. He's Moreno. The lady who's been chosen is Claudia. Very, very intelligent lady from Mexico City, was the mayor, was part of a team that won the Nobel Peace Prize. And she has now been, like they nominate in the States, she's the nominee for Moreno. And then you have a party on their side made up of a number of parties that have come together, PRI, et cetera, et cetera. Xochitl is the lady who's leading that. Very much a rags to riches story. An entrepreneur, has done very well in business and now wants to run the country. She's been nominated. So we're going to have a female president. Xochitl is very pro-business. She's an entrepreneur. We don't look at the individual. We look at the party. We think that on the Claudia side, they have some very strong business points also, taking the people out of it. So we're comfortable with either party winning because we've navigated that for almost 30 years. We're in the state of Sonora. The state of Sonora is a pro business state. The governor is Moreno, second year, a 6-year term. He is pro business. And we're very fortunate to be in that state. They've been chosen as the state that's for the offshoring, all of these different things. And we like that state. We think business is going to be always important there. We're part of that business environment. So to a degree, from my perspective, it's going to be close election. I don't know who's going to win, but no matter which side wins, we'll still do what we've done and navigate in Mexico. I got to tell you something else, and I've been telling this to a lot of people. I think it's important people hear this. All of this noise affects business in Mexico. Some people aren't going to want to be there. Some companies have already failed years ago, nothing to do with this in the mining industry, peers or competitors, and they're just going to go away because they're going to use that as not as an excuse. It's too hard there. You know what? When everybody kind of says, nope, don't want to be here, we're not unhappy about that. Okay. We're doubling down on Mexico. We're not going anywhere. Mexico produces the most silver in the world by far. The world today needs 1.2 billion ounces of silver this year. We're going to produce 800. Mexico makes 150 of the 800. If people think that's going to get turned off, okay, that's their choice. We don't.
So you obviously have some positive thoughts on the silver market. Where do you think the silver price ends up at the end of the year?
I was on a panel at VRIC with all these silver people, and the guy who wrote the book, The Silver Bull, Peter Krauth, and the guy who wrote Rich Dad, Poor Dad was up there. All those people. And I was sitting up there. I'm just a simple securities lawyer that understands the mining game that's going to build a silver mine. So they started talking about silver going to 300 and 400. And I said, guys, stop. We've been doing this for 25 years in Mexico. We mine gold at $250 and made money. Okay. We think $25 silver is absolutely incredible. We're not getting any sentiment in the market for that. $2,100 gold. Oh my goodness. When I did my PEA, I'm at 21 and 18. You go plug those numbers into my PEA and I'm not making $500 million. I'm making 800 million. So the price is absolutely fantastic because all we want to do, we win only one way. Forget drill holes. Forget sentiment. We win by building the project. We always have. That's all we think about. So the price is great. Do I think it's going to go higher? I do. And there's reasons why. You asked me, look at the shortfall, 800 to 1.2 billion. That's real. That's not made up. That's real from the Silver Institute. And they want silver. They want solar power. Well, this year, solar power just changed to all the new technologies that you know about, Merk, et cetera, et cetera. They're using 30, 40, 50% more silver because it's reflected. The car business has slowed down electric. It's going to come. I never thought it was going to come as fast. If you see the silver that's used in an electric car, it's nuts. So the demand is just going to go up, electronics, et cetera, et cetera. But here's the crux. Here's the crux. Why is it going to go up? Last year, we got such a thing as inflation, Last year, across the board. First of all, there's 58 silver producing mines, true silver mines. There's all byproduct in the world today. By 2027, there's going to be 42 because every day we mine ourselves out of business. By 2028, 38 left. Think about that. Now, the second thing that I think about is your all-in sustaining costs. Last year, the all-in sustaining costs, we got an inflationary world. For those 58 silver companies went up by 57%. To $16.56. And now the projection is every year it's going to go up by 9%. Do the math. Do you think people 3 years from now, when it's $23 across the board to take it out of the ground, are going to do it for 25? No. So those are the simple things that I look at. All I know is if we're successful in 18 months from now or 20 months from now, I become, what will that be? 43? You're a good place to be in the silver world. So that's how we think.
Oh, that's a great answer. If you can, looking ahead to 2024, if you can just recap what milestones investors can look forward to for this year.
We're going to finish this pre-feasibility study this summer. We'll debut that when we go to Beaver Creek in Denver. That's the plan. It's going to be, I've already told the world in the press release, it's going to be better than most people are thinking. What we're seeing so far, it's incredible. It's just a money generating machine. That's done with a bow on it, ready to build. I'm going to wait as we get that finished into next year, continue to go through the amendment to our permit so that we can start getting at that and mining it. Secondly, and let Francisco Albalez, the expert, get to work. And he's ready to go. The engineering, everything's done. Never forget the underground. We're going to basically then pivot back as after that's done and ready, say, okay, that 100 million silver equivalent ounces in the underground, it's going to get bigger. We've got to drill more from underground. And when we got everything done and the metallurgy all done, which is being worked on now, we're going to come out with the economic study early next year, the PEA, on the underground, which I'm permitted for. And then, I mean, you can dream, don't dream too much in Technicolor. Pretty quickly after that, that PEA becomes a PFS. And now we're sitting there going, we can build the stockwork when we get the permit. We have the permit for the underground. We'll get at that. But the right thing to do, the way these always should be done, easier stockwork, less capital, drives huge cash flow to go after the underground very aggressively. So, you know, that's the plan. It's all in front of us and we'll deliver those things.
Well, that's great, Glenn. It's been really impressive what Silver Tiger and the company's done up to this point. I just wanted to say thank you for joining us in our first 3L webinar, and we look forward to seeing the El Tigre project advance this year.
Steve, thanks so much for having me and really enjoyed it.
Thank you.
Well, that concludes our inaugural webinar. I'd like to thank you this time for joining. I hope you found it informative and interesting. I'd like to thank Peter Maletis, Heliostar, Coppernico, Silver Tiger, and G Mining for making this a success. Should you want to do a deeper dive on these companies, please go to our corporate website and access our research reports. For what's next at 3L, please follow us on social media for company updates and what's next at 3L Capital. Thank you for joining.